Good evening, everyone. Welcome to tonight's OTC. A lot to cover, so I'm going to jump into it. And I got a late start tonight due to a personal conflict, a family affair that I had to tend to. You've heard me use the term hard money, and I've mentioned it a lot over the last couple of weeks as the market, went from, this easy money expansion cycle into this very turbulent couple of weeks, ending in this, pop into today's Fed meeting. And, the market has a way of doing what the market's going to do, and it kind of times itself in conjunction with, events that I think the world watches. And the Fed, obviously, all eyes are on the Fed. Even though the Fed didn't do anything, the market still found a way to correct itself. And again, this to me is very much a corrective cycle. This whole price action that we've seen has the characteristics of what is corrective price action, and corrections lead to further trend, further expansion, I should say. As we look at this, once we broke above this short-term level, yes, that created some short-term opportunity on the upside, but it clearly was short-lived. And I think where, the problem lies, and again, we got stopped out of a couple of trades today, unfortunately, was when the market failed right here on this day, right here, and then we got this little 3-day setup. To me, that was a signal that this could, lead to further downside. Well, that never occurred, and we corrected a little further. Now, as we look at that correction, as I've shown you over the last couple of nights, we really are now snapping into these moving averages, and now we have that, a little bit of a tail down. We still have another day in tomorrow, Friday, to play this weekly chart out. Now, it would not surprise me to see this weekly chart if we kind of zoom in here on this week, and we look at this weekly bar, where this whole week becomes one big tail down, and we close somewhere in this area where we opened. So if I look at the opening price, we open around 197 here in the spiders. So it would not surprise me, and again, I'm putting this out there, if we close the week somewhere down here. Okay? That would make our weekly bar some sort of large topping tail as we go back to that weekly. And that could, lead to, again, begin to lead to further downside. I'm still very much in the camp that I've been in, and I refuse to chase the long side. Now, even though we did manage to go higher, as we all know from watching the market, clearly this was not an easy long. This didn't just go straight up. This basically went nowhere for 2 or 3 weeks to only then, give you 3 days of juice into the Fed meeting. So I'm not disappointed. I am disappointed in that I think I timed us into trades probably a little prematurely. I got a little overzealous, and I said this in another video. They say you can't time the market, and I say you have to, because as a result of today, we're going to have to take some losses here, unfortunately, as we took a little bit of a haircut over the last, 2 weeks or so. I really only put one winner on the board, 1 or 2 winners on the board, maybe the entire, what has been since the beginning of the month, and we've had maybe 7 losers. So has not been, a good performance. Now, I've been skewed to the short side. I'm going to stay skewed to the short side because when, like I say, when this market does prove to actually turn itself down, I want to be set and in the position that we are going to make, a lot of money. And that's the reason I stay, kind of leaning on this side of the tape. The other side of the other position I could be is just in cash. But I feel like we can weather the storm, even if it means we take a couple of knocks along the way, because the outcome, as I perceive it to be, is going to be way more substantial. Now, that takes courage, that takes confidence, that takes guts, that takes, believing in, the analysis. And if you're not a believer, and, certainly by all means, don't, you don't put, we're all about the decisions you make as a trader. You live and die by your sword. I learned this very early in my career that if you see a trade and it's the right trade and it makes sense to you, you go for it. And the more you develop that attitude, the more money you're going to make as a trader. Now, that doesn't mean you swing for the fences on every single trade. That means you have a calculated, methodical plan, but when the stars align and you know that that's your pitch, that pitch is right down the middle and it's what you've been waiting for, and it's your pitch, you swing the bat. And that's the way traders make money. And I said this in a video last week, the best of the best in this business, the people that are the most respected, whether they've made the most money or however you perceive success in the markets, it's because they know when to swing the bat. And even the best traders, have drawdowns and get knocked around every now and again. But when the trade and the stars line up, they swing the bat. And that is what I am going to do. So I'm saying that with utter and complete confidence. I'm saying that, just to kind of get everybody's head right. I know it sucks to lose money. I know it sucks to be in trades that don't work. I get it. We're all human, but it's not a perfect science. Trading is not about being right. Trading is about, like I said, understanding what your pitch looks like, waiting for it to come to you, and then swinging the bat. So as we, with that, I just want to say that, in hindsight, everybody's a genius. And in hindsight, I could have, should have, would have maybe done a little less or waited a little bit longer. But I, like many others, saw opportunity, and I wanted to be there if that opportunity were to strike. I did not perceive this hard money cycle lasting into Fed meeting, but, that's kind of the way the market works. And, you live and you learn. So let's just move forward as I want to go right into it and put on some trades because I think that, it's an opportune time. So we're going to start with JP Morgan. Financials in general have been very, very weak. You got really that one reflex day, and then you maybe got 2 days of gapping up post that, and they've done nothing since. Relatively weak to the market. Even today, there was no buying. As the market kind of rallied itself into the Fed, there was no buying in financials anywhere. So financials to me look like they are setting up for lower as there's really no buying here. So I want to look at JP Morgan, closed at 62, just above 62.5. Any little bounce up to 63 I think represents a good low risk area. We'll put stops at 65. And I think we could see down into the mid area of this tail, which is around 54. On that note, let's also look at the XLF, which is a financial ETF. Same setup. Almost identical. So these two will work, pari passu with each other. And you can see the setup here, 23.15, basically a break of today's low. Stops here, and targets down around $20. So again, almost two identical trades, so I am going after financials a little bit. Now, you can look around the horn, and Morgan Stanley looks pretty weak. Goldman Sachs looks pretty weak. Citigroup looks pretty weak. Bank of America looks pretty weak. So no matter where you are in Financialville, it looks to me like these stocks are, there's no buyers here. So let's look to engage, at least in some of them for now, on the short side. I'm also looking at Berkshire Hathaway B shares. I wish I could, Berk A is a little too pricey at $198,000 a share, but Berk B, let's dip our toe here as well. Another stock that has been consolidating, no buyers to be heard of, beneath its 21 EMA. As we look at the weekly, 4 weeks of basically sideways consolidation. You can make the argument this has been, some sort of consolidating wedge here. But this to me looks like it's setting up for lower prices as well. So take a look at Berk B on the short side. Baidu, Chinese internet name, another relatively weak stock, rallied into the 21, turning down today. We'll look for an entry, keeping the risk pretty tight here, 146.65, and stops will be up here at 153.5. Target down here again into the midpoint roughly of that bottoming tail. So keep your eye on Baidu. These Chinese names have been somewhat challenging to trade. NetEase looking pretty weak as well. Sina doesn't really seem to have much in terms of buyers. So some opportunity in Baidu as well. Gilead, a trade I'd put on the board 2 days ago, did trigger today on the upside. Traded as high as 1330. The entry was 12.5, 112.5. So this is now an open position, and we will manage it accordingly. Stops are still going to be TBD in the next day or two, depending on what the price action is. I'll probably put in a hard stop there. Target trading up into prior resistance here at $79, but turning down. So still an open position, still just kind of hanging around. Monster turning down today, did trade as high as 136, which was our entry spot, closing the day just under 135. IBB did take out our stops today, another one that, just couldn't seem to find any ability to turn down. Now, IBB, as I've been saying, this has not been an easy trade. This stock is kind of hovering in this, what is this broken support resistance area. And I think still be very, very careful about being, engaging in the stock, as it's in an area where I do think a turn is imminent. I just didn't time these stocks very well, and like I said, in hindsight, was the right idea, trading into this zone, especially here on this day when it turned down. But the market was just too much and just refused to relent in any way up until today. So IBB at a loss there. Facebook, another one. Gave it some wiggle room, but, and again, trading back into resistance, very rare that you see a snapback like this with really no pullback. Usually you'll get a deeper pullback and then you'll get a rally, but no pullback to be heard of there. So Facebook still continues to, act well, but like I said, be very, very careful about just becoming, bullish into these stocks. These are dangerous zones that these stocks live in. In hindsight, hindsight's 2020. Obviously, I would have liked to have gotten the better part of this trade, but certainly it just wasn't in the cards, and that's okay. Costco, same thing. Costco tagged the stop by maybe 2 cents today before turning down, trading up all the way back into resistance, and then tailing down. So I'm going to take all these out as for losses, unfortunately, tonight in Amazon. Another one that continued to just outperform. So still outperforming these stocks. Some of them still continue to amaze. Solar City didn't do much today. A very narrow day, so we'll continue to watch this one. No reason to jump ship here. So a whole bunch coming out, a whole bunch coming in. I'm still going to continue to attack as I see fit. Obviously been choppy waters, and we'll just continue to be patient and look to make some of this back over the next couple of weeks. Financials I'm going to key on financials because I just don't see the market rallying with any real sustained upside without the financials participating. And as we all know, not that I opine ever on the economy or monetary policy or politics or religion or anything like that. It is of my opinion that what the Fed is doing is not helping anybody. Raising rates, even when they do raise rates, we all know it's going to be some nominal, marginal, fractional raise. So this whole, zero interest rate, it can't go on forever, and they're just delaying the inevitable. And I think the market is basically setting up to tell us that. So take it for what it's worth. Again, it's just one man's opinion. I'm sure there are others that echo my sentiment to some degree. But let's continue to focus on price and look for some better timed trades. All right, everyone. I appreciate the support, and I appreciate you listening, and I appreciate you keeping your head above water and staying with the program. Have a nice evening.